So far through the month of September, we've been seeing a lot of risk appetite in gold miners, consumer discretionary, utilities, staples. Part of managing risk is making sure that as we go into end of quarter, that we're starting to see some of the rotations that are becoming really obvious. So you take a look at metals and miners, home builders, industrials, communications. There are a number of sectors that are starting to rally that have been very weak month to date. Now, why is this a risk conversation? Well, part of risk is making sure that we're focusing on the trends that have the most chance of continuing. Part of building a watch list around account growth, where managing risk, of course, is super important, is making sure we're trading symbols that have the best chance of follow through. And that's exactly what we want to continue to do. We did it in August. So if you've been watching these videos for any length of time, you know what we were doing in August. The defensives were where the strength was. So if you take a look at what we did in August here, this is my August trades viz. In August, and this is the account that I was using for what you all will learn this evening in the webinar, 8 p.m. You can check it out. simplertrading.com/reliable. We'll come back to that in a moment. But what are you going to learn? What is the important thing about not just the end of quarter, but going into the end of year and into next year? Because rate cuts are here. Rate cuts are coming. This is how we're going to prepare. Take a look at what we did in August. These are the kind of trades we put on in August. A lot of defensives, a little bit of healthcare, right? But mostly focusing on the strength that was representative of the flow of the attention in August. But if you take a look at September, so this is where we are so far in September. So I reset the account to 18.5. We're up so far just over 8,200. But the trades are a little bit different, right? So it's not just about finding what folks are talking about. It's finding where the follow through is going to be. That's exactly what end of quarter could continue to reveal. And we're taking on positions in places that are a little bit more in line with the optimism that we're seeing with the rate cuts. So take a peek again at this sector lineup and then think about, what are you trading right now? Because if you want a surefire path to struggling, you'll focus on the laggards, right? This is where we want to avoid regional banks, oil and gas explorers, even energy right now. Two sectors that I loved earlier in September are absolutely tumbling. That's financials and healthcare. Sectors that we've been watching kind of closely, like staples, are still okay, but utilities, a position that we just took today, is still a huge outperformer. Get the watch list right, and then that sets you up for much better risk management, because now what we know is there's a higher possibility for continuation. And if you want to know the antidote for risk, it's finding things that are going to move in your favor. But what happens when things don't move in your favor? How do you manage the kinds of trades that we might have to deal with more volatility? And that's a big part of what we're going to be talking about tonight. Not only do we want to think about position sizing and account risk and what we're trading, but we really want to think about this in a formulaic way. There is a formula. There's a formula to risk management. There's a formula to position sizing. There's a formula to account growth. And they're all related in terms of the topic, but again, there's an individual approach to each depending on your account size. So if I'm talking to you and you've got a $50,000 account, there's a formula for that, and it's going to apply to a $50,000 account. But if you have a $5,000 account, there's again a formula for position size, risk management, even what you're going to trade, but it's going to apply to a smaller account. And this is where traders get into trouble. They think about these things as one size fits all, and it's just not a ball cap, right? We have to have that custom type approach, and then we have to apply that a custom approach to where the movement is going to be. And this is where the movement is setting up. So if you haven't taken a look at, say, utilities over staples right now, please do. If you haven't taken a look at consumer discretionary, please do. There's a lot of outperformers there. Gold continues to be the top of the heap, so we want to keep an eye on gold futures, the gold ETF, Newmont Mining, GDX, which is the metals and mining for gold, right? We also want to keep an eye on the metals and mining for copper. These are names we haven't talked about as much as we've gone through September, but this is where the attention is. Apply the right formula to these names, and that's where that account growth is going to be. So again, check out what we're going to be talking about tonight, 8 p.m. You can catch it on replay as well. Head on over to simplertrading.com/reliable, and let's get to growing those accounts. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.